Elon Musk owns Twitter, as everyone realizes the earth is flat after all. Jim Cramer cries on national TV as Facebook Meta crashes. Bitcoin and Ethereum are looking more and more like safe haven assets. Leading indicators are telling us that a recession is coming while the talking heads tell us the opposite. Breaking news this very hour, US pending home sales collapsed in September and early October. What the hell is going on? It must be Halloween time on Money Talks. Let's do this. All right. Hello. Good morning from sunny California. Before I get started today, of course, I have to comment on the news everyone is talking about. Elon now owns Twitter. Apparently, he walked into Twitter headquarters lobby with carrying a bathroom sink. I don't totally get it. I guess he's going to throw the sink at the problem, whatever. But he now owns Twitter. I have friends out on the interwebs already rejoicing and claiming that they're seeing fewer bots, more engagements on their tweets. I don't see how that's possible less than 20 hours after he closed on the sale of the company. So it's unlikely that Elon fixed anything, but some people just, need a fix to feel better, I guess. Anyway, so it also looks like Binance is a part owner of Twitter. I think they invested, or CZ himself, or one or the other. I haven't been able to figure out which. I was looking at my notes earlier. I believe they said they wired $500 million to back the takeover. So that would be, let's see, 500 million out of 50. So my quick math says that's probably about 1% of Twitter. So interesting to see that either Binance or CZ himself, or some combination of the two, own about 1% of Twitter now. That's before dilution for keeping the employees. Really interesting commentary this morning. So look, the bottom line is that crypto Twitter is, as the Bankless guys said earlier, the public square of Twitter, and public square of crypto, and we need an open forum. Now, I don't know, bringing Ye back and Trump back and all the people that have been banned or shadow banned, you can decide for yourself whether that's a good thing. I personally think we need a public free speech forum without overlords telling us what's true and what's not true, and we'll see how it works out. I use Discord and Reddit on occasion because I have to, because of my work at Abra, and the two of them are both dumpster fires as far as I can tell in terms of usability, quality of content, and you have to really sort through a ton of crap to find anything useful. That having been said, there's a whole bunch of changes I'd love to see at Twitter. I'd like to see unverified users have to make small micropayments to send a tweet. Now, given the global footprint of Twitter, that's a problem because people in Zimbabwe can't easily add dollars to a Twitter wallet. But this could be a great application for Lightning or another low-fee altcoin like Litecoin or even Doge, for all I care. I'd like to see a threading model that allows me to engage easily in different communities. Right? I'm very active on crypto Twitter, but I spend a lot of time in topics that interest me, like augmented reality, artificial intelligence. I'm a Warriors fan, so NBA Warriors, et cetera, et cetera. I'd even like to see a Twitter channel on the future of Twitter. Anyway, I'd also like an ad-free option that I wouldn't mind paying for. So anyway, all right. So if you're listening to Money Talks on YouTube, you may not be aware that Money Talks is also available now on Apple Podcasts, Spotify Podcasts. We broadcast live on Facebook and Twitter. So our viewership is growing across all the channels. We had a bit of a lull in the summer, but a lot of our viewership has migrated away from YouTube to other formats. If you're watching on YouTube, please click the like and subscribe buttons on YouTube. Stop what you're doing and do it now. If you're listening to this on Apple or Spotify, usually we release those a few hours after the live broadcast. Please give us a 5-star rating. And even better, share the video or podcast with at least one other person on your social media feed. Share the love, right? We really got to get the word out on Money Talks. We put a lot of work into this, and we want people to know about it. All right, it's Halloween. It's Halloween on Money Talks, right? And you know what that means. We're going to get into some Bitcoin Halloween price correlation chatter in a few minutes. Let's do a costume check. So I'd love to know who's wearing a costume, or if you've got kids with costumes, let us know in the live chat what your favorite Halloween costume, and maybe some extra points for anybody who's got a crypto specific costume idea. I don't have my costume ready yet, so I need some ideas for a party for tomorrow night. Okay, so let's get into this. So we're going to do an upfront segment on what we call charting course for crypto, right? And this is going to basically relate macro to what we see going on in the world. Now, the breaking news from the last, I don't know, even the last few minutes, actually, hot off the presses, is that U.S. home sales collapsed in October. And I'm going to show you this chart if I can get my act together here. U.S. home sales, say that time five times fast, collapsed in September and early October, weakest levels in 13 years. Now, this discounts, obviously, the beginning of COVID, which was a one-off, but clearly the economy is in trouble. And you can see here the blue line is pending home sales index year over year. Has collapsed. The green line, the green bars month over month have collapsed into the red down here on the right, and it is ugly. So if I scroll down here, I apologize for the grainy grainy chart. Well, I'm using the zero hedge version of the chart. The dropped pending home sales index is at its lowest level, as I said, since 2010, minus COVID lockdowns. Look at this red line. It is UGLY. U.S. pending home sales index is looking to be, was it down 79, down from 130 right at the kind of beginning of the lockdown. So clearly we have fallen off a cliff, and this is directly correlated to rates. So now let's look at this, right? So, and this makes perfect sense, right? Home affordability for the average middle class American is directly related to what they're paying in regards to interest, because that's the big variable. And as interest rates go up, and this is an inverse plot of interest rates, you can see home sales fall because the affordability goes way down, and nobody wants to lower the price of their home in order to get a sale done. And that hasn't really happened in my lifetime, with the big exception of 2007 to 2000 or 2008 to 2010. And we're going to be hard pressed to see that again. All right. So home sales telling us that, stop that here. Home sale numbers telling us that we are likely headed towards, and I've said all along, I think we're in a recession. You're going to see, let me see if I can find the ISM numbers here. I think I have it. Yeah, here we go. Let me share this back with you again. The ISM number also looking ugly. Share this with you, right? So here we go. We've talked about this many times. Manufacturing index as a basically a good leading indicator for recession. Here's correlation to the S&P 500. Some ugly numbers coming out of the tech stocks yesterday. We may have had an overnight capitulation on tech for the short term, because we saw, I think it was Meta absolutely collapsed. I think it was down 20% after hours, and it's recovered since. So we may have had a short-term capitulation driven by the fact that we had mixed news on the fact that Apple, which is probably the best run company of any large scale in human history, or certain modern history, it just continues to crush it. I have a lot of problems with Apple. I'm all in. Here's my iPhone. I'm using the MacBook and other Apple products to bring you the show. I love their products, but some of their policies and the way they basically inject themselves into content is a little bit concerning to me. But that aside, they do make fantastic products. But the point here is that tech stocks have been ugly. And again, I'll say the UGLY this year, and it's starting to look like what we'll talk about in a minute, that Bitcoin and Ethereum may be the safe haven assets right now, certainly from a volatility perspective. Here is this is a little bit smaller. Maybe we can zoom in here. Let me see if I can do that. No, that's not going to work. All right. So here's the balance sheet strength for showing us the odds of a recession. So and here's the net percent of executives telling us that a recession is likely, and it's approaching pretty much guaranteed recession numbers right now, right? So again, excuse me there, stop this. The numbers are not looking good from a recessionary perspective, but as we talk about interest rates and forward-looking indicators, I actually believe this represents a bottom or close to a bottom, and it will be choppy for a while for risk-on assets, right? So my prediction is, and again, this is what I do for myself. I try to make predictions and allocate accordingly, but you already know I'm all in crypto. And right now, if I had more cash to invest, it would probably go in crypto as well, because I do think that crypto is going to get the upside of the next rally here. I do think that the Dow will probably outperform over the next 18 months from a stock perspective, as people try to decide which tech stocks to get back into. But we are headed, in my opinion, towards a big rally, which I wouldn't be surprised if it takes until next summer to really say that we're in rally mode. But it's going to creep up on us over the next few months. Now, what's interesting is that, as I said earlier, it's starting to look like Bitcoin and Ethereum are rearing their heads over the sand. Over the sand again. And let me bring up my Ethereum chart here in a second. But yeah, I mean, we've had a nice little mini rally this week in both Bitcoin and Ethereum. Here's the Ethereum chart. Should get it up here in a second. And you can see over the past, today's the 28th. So we were at 1275. Right now we're at 1535. So that is 260 odd points on Ethereum, right? Which is a nice 18-ish point run, if my math is correct. Maybe I'm off a little bit. And Bitcoin over the past week. Now you see this trough last Friday, which, remember, at the beginning of Money Talks, we were way down, and we weren't sure if we were heading to new lows, but we actually rallied, and now we went from 18,700, and we're now over 20,000. So that's about 1,700 points on Bitcoin, which is a little under 10%. Again, quick math here. I used to be better at math in my head when I was a kid. I guess old age is catching up, but I'm pretty sure that's accurate. So again, a lot of the talking head commentary here, ironically, well, it's mixed, right? So if you do the math, obviously the volatility for Bitcoin has been lower than a lot of stocks. Some of the talking heads still saying, hey, why would people be crazy to invest in crypto in these markets? But even CNBC, which has been kind of unfair or unrealistic in terms of actually doing the math, had to acknowledge that Bitcoin's volatility was below NASDAQ and the S&P 500 for the first time in the last couple of years, right? And you can see really interesting article. While Bitcoin's price is stuck lately, there is one good thing to come from it for investors betting on crypto to become a legitimate asset. It's less of a wild ride. And I never thought I'd see that, but or at least not in the short term. Anyway, you can read the article. That's interesting. But clearly, for now at least, Bitcoin has become a less volatile asset. I want to show you, let's see, a couple of things here. So the big question of the day, right, is going to be money supply. And as we know, right, the price of risk on assets, stocks, crypto, to a certain degree, real estate is going to be driven by money supply, which in the short term is going to be driven by interest rates. But here is an interesting video I saw this morning it's from a couple of days ago, but it's really relevant. And it's from, I don't know how to say his name right, Mohammed El-Erian. I think he's like the head of one of the colleges at Oxford in the business school there. And he was talking about inflation. So let me share this correctly before I do this. So now with this video, I'll warn you, sometimes the YouTube injects ads, and I'll try to skip the ads as fast as I can when I do that. So I always want to clarify that. Let me see.
Mohammed, we're going to talk about what's happening in the UK in just a moment. But first, let's just talk about the markets this morning. Equities up again, and this is happening as yields are coming down around the globe. What's the message? That sounds like it's bigger than just a thought that maybe the U.S. Federal Reserve is pivoting.
So we shouldn't take much comfort from the yields coming down around the world because they're coming down on growth concerns. The European PMI numbers were horrible. Germany is at 44. And in China, while the GDP numbers beat, there's a lot of question marks about it, especially given what's happening in retail sales. I think what's happening to our market, and it's wonderful to have the best week since June, it's wonderful to see the rally continue, is that we've redefined what a pivot is. We've redefined it from meaning lower rates to pausing to slowing. And if you redefine that, then you will have a liquidity effect. And that's what we're getting. We're getting a liquidity effect rather than a fundamental effect.
Right. So he's absolutely right. I've talked about the big pause, right, as being the groundwork for the midterm pivots. The pause is coming. Would be shocked if the FOMC Fed language coming out of the upcoming meeting didn't point to, hey, we are looking hard about when we need to start tapering, or if they actually even adjust to a 50 basis point hike versus 75. Market's still pricing in 75. If we get a 50 basis point hike, I believe we would see a massive move higher in stocks and crypto almost immediately, right? I wouldn't be surprised to see a 10% move, like boom. 75%, we've kind of brushed that off. Then we'll basically look to the language, which I think comes out a few days later or a week later, whatever. So if the language is basically dovish to some degree or integrates dovish commentary, and I think I said last week, you start to see this or feel this kind of conflicting commentary. Whereas at the beginning of the rate hikes, it's all basically raise rates. We have to taper this. And Powell is looking for unanimity in tone of voice from all of the Fed governors. When you're at the bottom, you end up with varying opinions, and it's impossible to simply reflect because you can't hide their public commentary. It's impossible to reflect unanimity, and that tells us what's coming. So this pause is coming. I've been saying this to you since September. I think it's coming in December now. I think the rate hikes will stop. I wasn't sure if it was going to be December, January, February. My current guess is December with a 50 or 25 point hike, and we may get an indication that they plan to pause there unless something changes. We shall see. So it could be a Christmas rally going into the new year. I don't know. But again, understand that there's traditionally an uncorrelate or a reverse correlation between acknowledging recession and bottoming of risk-on assets. Right. And so I think basically we're skimming the bottom right now, and we may be skimming the bottom for several months. But traditionally, those who are good at timing the market to some degree at a macro level, not on a day-to-day basis, have done well by reinvesting in risk-on assets, either at the beginning of a recession or when the talking heads finally acknowledge that we've been in one, which is where I think more or less we are now. And of course, the big question mark with recession, certainly for the US market, is unemployment. Everybody's like, well, when is unemployment going to start to rise? The thing that bothers me about how we look at employment numbers is how we define the denominator, right? The number of people who are gainfully looking for employment or want to be employed. Right. And that number fluctuates. It fluctuates more than it should because people aren't, being born and dying in and out of the employment pool every day. Part of the issue there is okay, so interest rates rise, right? So the value of my assets goes down in theory, and I have less money, so maybe I have to go back to work. The other problem is the numerator reflects people in poor paying service jobs, part-time labor. And so if you actually break it down versus where we were, let's say, in the 90s and early 2000s, the quality of the labor market has gone down dramatically in the United States. Now, the number of high quality job openings still is, reasonable, but we can't fill those jobs. And that's been a problem for us for 10 years in this country, right? And so there's a disconnect between how we report employment, who's looking for a job, what kind of job they're looking for. And it all points to a mismatch in what really is a high quality employment number in this country. So you need to dig into the numbers. And in this regard, we've always had a problem, and this hasn't gone away. In other words, you've got a whole bunch of people making somewhere between $10 and $20 an hour who can barely afford to eat. They have to work 2 jobs. They're eating crap, which is affecting healthcare, which is increasing healthcare costs. They're probably not getting any exercise because they're working 2 or 3 jobs, and it's just spiraling, and it's going to get worse. Anyway, my prediction is that next year is going to be ugly from an economic perspective. We're going to have a deep recession. And look, my job here is my job. I do this to help and give a perspective that it's going to be positive for risk on assets, because the market will acknowledge that the powers that be have no choice but to inject significant liquidity into the economy. And as the gentleman said on the clip, simply pausing these crazy hikes will achieve part of that. And then I think we'll see a reverse at some point next year. Okay. So we're going to do an Ask Abra Anything segment in a few minutes as we get towards the end of the show. So tee up your questions. I am seeing some folks interesting costume ideas. So yeah, I'd love to see your costume ideas. Keep them coming. If you want to interject your costume idea with your question, we'd love to see it. All right. So a couple more comments on some news. So I want to talk. We're going to do another segment here. Actually, before we get to that, I want to talk about there was a really good article that I saw. Where did I put that? Here it is. It was actually a Twitter feed. This guy, Jamie Couts. Jamie is a crypto market analyst for Bloomberg, and he had this tweet storm. Trying to bring it up here. Yeah, I can bring it up. It was basically entitled "The Ethereum's Layer 2 Bull Cycle Has Begun." With the supply side boost from the merge in the rear view, the market should hone in on the demand dynamics, which are beginning to drive significant network effects. Ethereum on-chain fundamentals update. And then I'll put the name here. Just search for Jamie Couts, or I'll put the link in the show notes, or maybe the producers can do that for me. So here's a link. We'll post it to the feed on Jamie's tweet storm. He basically goes through a whole bunch of fundamentals that point to significant network effects combined with the deflationary nature of Ethereum Layer 1 right now, representing significant upside opportunity. He said longer-term horizon investors might pay to look through the current activity recession and appreciate the trough-to-trough expansions from 180,000 to 400,000 addresses during this cycle. That additional 220,000 addresses reflects an expanding price-insensitive community of developers, users, stakers committed to the ecosystem, building Web3 apps, DeFi, gaming dApps on the network. But the role of layer 2s cannot be understated, right? So if you're really interested in Polygon, Arbitrum, Optimism, you'll really enjoy this thread, and I got a lot out of it. I had to read it several times to fully appreciate what he was saying. But we have a token fund that invests in layer 2, and so we're always looking in and at interesting analyses, and that was one of the better ones that I've seen lately. All right, let me just check my notes here, make sure we got to that. Right. So there was also an interesting Cointelegraph article that I read about how to measure the cycle. Right. And before I show that, I want to show this. I'm a little worried right now about the Bitcoin hash rate as it relates to price and mining. So you can see, right, it's hard to tell from this, but this purple line here is the Bitcoin hash rate. Right, 256 relative to, let's say, at the beginning of COVID, we were at, come back here, 112. So the mining hash rate has more than doubled, right, since the start of COVID, and yet the price of Bitcoin is more or less where it was, or actually, it's above where it was. What am I saying? It is up, but it's really flat over the last, obviously, 2 years, while the hash rate has continued to explode. This is a problem for miners who've been coming in for, let's say, the last year or so, because they're investing in equipment at a certain rate, investing in electricity at a certain rate, and facilities at a certain rate. And if we get a sudden price drop, let's call it a last capitulation down here to this 10,000 or 15,000 range. I don't think it's going to happen, but what do I know? It could easily happen. Some of these miners are, especially the smaller ones, I would posit are in big trouble. And I don't know exactly what that would mean for certain parts of the network in terms of the hash rate plummeting, which would obviously happen if these miners go offline at large scale. But it would happen, and we haven't seen it before to that degree. So I am a little worried about it. I really, in the context of we don't know what would happen, because I don't know that we've really seen a drop in hash rates that steep. I mean, you can look at the chart, right? I mean, how many times do you really see, like, here's a small one back in 2018. Here's another small one back in last summer. And here's another small one back in 2011, right? So there really hasn't been like a super steep decline, like a drop of, like, let's say 50-60% has never happened in the history of Bitcoin, to my knowledge. And so we don't know what would happen if that happened. But as I said, I wouldn't be surprised. So I mentioned there was this interesting article from Cointelegraph. Here it is. How long will the bear market last? Signs to watch for a crypto market reversal. I'll try to, here, we'll get this into the live stream. You can check it out yourself. But it talks about catalysts for the current bear market, consumer price index, money supply, and obviously signs that the bear market is nearing an end. And it's more or less a historical analysis, but it's pretty good. According to Grayscale, the crypto bear market commences when the realized price of Bitcoin surpasses its market price. And the realized price, defined as the sum of all assets at their purchase price or realized market capitalization, divided by the market cap of the asset, which provides a measure of how many positions are in or out of profit. Right. So basically what it's saying is when everyone is in profits, it could be the top of the market. And when most people are out of profits, it's or a lot of people are, we could be at the bottom. Right. And so a lot of times we see these kind of max drawdowns, and you can point to several times in history. Here's the history of the Bitcoin halving. Let me see if I can make this bigger. There we go. See this history of the Bitcoin halving, and it's happening again. Yeah, there we go. So, basically, if history is consistent, we could end up with a price in the kind of, if I look at it, a log chart, and I'm up over here by the fourth halving, easily in the 200,000 range or more. I have to say, I wasn't convinced of the halving cycles being a long-term trend, but it's certainly playing out again, and there's no denying it. So, interesting article. Check it out. Start teeing up your questions. So we'll get to the AA in a couple of minutes here. And so ETH bull cycle I talked about. Check out that article. All right. So we're going to basically have a new segment called Let's Get Bill's Take. And, we've already been getting Bill's Take, but we're going to get a segment dedicated to that. And what we're going to do is, in the future, we're going to show some more video. Here is one that we found. I don't know. We already saw Mohammed's take on inflation. There was one more. Did I lose it? I think I lost it. All right. So yeah, we'll come back to it if I find it. But the article that I wanted to talk about was Hong Kong is moving towards a friendlier crypto stance. So this is super interesting, right? So Hong Kong plans to legalize retail crypto trading and become a hub for crypto, right? And so the city has set out a goal of becoming a top digital asset center. Mandatory licensing regime is going to be imposed next spring. So they're pivoting towards a friendlier regulatory regime. Now, why is this interesting? Hong Kong, relatively small country. Now, Hong Kong is basically the hub for all things coming in and out of China from a business perspective now. That's an oversimplification. But China really is the gateway in and out of the West for China now. Right. So this planned mandatory licensing program for crypto platforms will be enforced in March and will allow retail trading, according to some folks that I've talked to. And the regulators are seeking to allow listings of bigger tokens, but they're not going to endorse, anything. but they basically said that they will officially allow, because I think that unofficially people have been doing it like BitMEX and others, but the government is expected to flesh out this recently stated goal of creating a crypto hub at a fintech conference they talked about earlier this week. Super interesting. We'll track this very, very closely. I believe, and I've said this before in Money Talks, that one of the reasons that Bitcoin didn't capitulate at 85 or 88 or 90,000, meaning it peaked at 68, was the China mining ban. And if it turns out that China reverses course via these Hong Kong regulations and pushes mainland companies to set up shop in Hong Kong, that could end up creating significant demand again if people believe that it's game on in China. Okay, so and as you know, year over year growth in transaction volume in China plummeted after the mining ban, but at the same time, it's way up in other parts of East Asian countries: Japan, Mongolia, Taiwan. Then you've got obviously other parts of China like Southeast Asian countries, Philippines, Singapore, where demand has continued to grow unabated, not just for Bitcoin, Ethereum, but for other products. We saw what happened with Axie Infinity and other kind of gaming and money transfer to protocols as well. So super interesting goings on there. That's something that we're definitely going to be paying attention to. New Prime Minister in the UK, crypto-friendly. New Prime Minister Sunak is how I believe you say his last name, has become UK Prime Minister following Prime Minister Truss. I think she was Prime Minister for all of 5 or 6 days. So he is apparently very crypto-friendly. He apparently also shepherded the UK's crypto ambitions while he was finance minister. And he's been chosen as the country's next prime minister. Super interesting. And the Conservative Party chose him. And he was, I guess Truss was actually in office for 45 days, although it seemed much shorter to me. And she was forced to resign after her economic stimulus plan unraveled, which led to extreme political instability in the country. I mean, the gilt market in the country just looked like it was on the verge of collapse and bringing the entire pension system down with it. Anyway, during his time as finance minister under Johnson, Sunak announced he wanted to turn the UK into a crypto hub, and he helped usher in the Financial Services and Markets Bill, which it hasn't passed yet, but if passed into law, could give local regulators broad power over the crypto industry, starting with bringing assets like stable coins under the guise of payments regulation in the country. So we'll also be paying very close attention to that. I know we have a lot of users in the UK. I know a lot of you from the UK are watching Money Talks. Thanks for watching, first of all. And second, let us know your thoughts on how Sunak is doing and what you'd like to see. You can leave comments on the live stream or on Twitter what you'd like to see out of the UK in terms of crypto leadership, right? And we'll see how that evolves in the coming weeks. All right. So we also had interesting. I saw some comments this morning on the dollar index, and if the dollar index really does collapse, and it does seem to be correlated with Bitcoin more than anything right now, meaning we thought that Bitcoin was correlated with stocks when it was really more correlated with money supply and the dollar index. It's just that they were all kind of moving in lockstep. And if the dollar really does collapse under the weight of a pause or the promise of a pause and future rate hikes, I think if it does, a huge Bitcoin and Ethereum and crypto rally in general could occur. There is a parabola forming, or that has formed over the last several months. Let me show you this. It's actually really good. So I have to get better at doing this faster. I have to practice. I have to practice screen sharing. I used to practice tennis. Now I have to practice screen sharing. Okay, so here's the parabola of the dollar index chart, right? And you can see the lines on the lows, and there's multiple parabolas that have formed over time at different steepnesses, right? And you can see that we're about to break this parabola here. And if a less steep parabola forms underneath, that would be super, super bullish for Bitcoin, in my opinion. And so, it turns out that money supply and the dollar are not a lot of the other things that we thought seem to be the primary driver for Bitcoin prices right now, because when you have a fixed float asset versus a free floating asset that you are printing logically ad nauseum, it stands to reason that the fixed float asset's value will increase when measured in the other asset, which is dollars, right? So in other words, in English, as they keep making more dollars, or at least saying that they're going to get back to making more dollars, the value of the Bitcoin should simply go up. All right. Okay, so hope you enjoyed that commentary. Let's see. There's some other stories that I found interesting this week. MasterCard and Visa both talking about getting into crypto. Both going to be either launching wallets or giving banks the opportunity to have wallets attached to their Visa cards or MasterCard cards, which is super interesting. So you can read all of that about that online. I would be remiss if we didn't talk about Halloween. So, it's Halloween time. We have to do a Halloween segment on Money Talks. On October 31st of last year, Bitcoin was trading at $61,300 with a market valuation of 1.156 trillion. I think I got that right, which was up 344% from the Halloween price the year before in 2020. And of course, I didn't sell a single Bitcoin. I didn't cry one bit, as I still know where all this is headed, and I've continued to buy at the lows earlier this year. And while we're at 21,000 right now, you all know where I think this is headed and why. Now, speaking of crying, right? We have to have a crying segment. Maybe we should have a crying segment on Money Talks. What do you think? I don't know. But speaking of crying, right? Jim Cramer, who most of you know in the US, is a very well-known stock picker, an analyst, a commentator, talking head, almost entertainer, really, on CNBC. On a segment yesterday, after Meta announced their earnings and announced that they were basically spending money like a drunken sailor trying to figure out an AR business, the stock fell like 20%, and he actually cried on air. And I have to show you this. I partially want to show you this because it actually affects the markets, partially because it's bizarre. Anyway, let me see if I can hopefully stop this and let me share this, do it right, optimize for video. Here we go. All right. So let me see, do we have it? All right, we got it. So here is Jim Cramer. Watch.
Tried. What did I get wrong? I trusted them, not myself. For that, I regret. I've been in this business for 40 years, and I did a bad job. I'm not proud.
You're not alone.
Proud.
You're not. I did a bad job. It was bad.
All right, Scott. So that's our friend Scott Melker, also known as Wolf of Wall Street's, commenting on Jim Cramer crying. I don't know what to tell you, folks. I know that there's a meme feed on Twitter, which is basically inverse Cramer, where you can make the inverse bets on what Jim Cramer is telling you to do. And that is way, way up the last couple of years, right? I mean, obviously, when everything's falling and he's telling you to buy, it's not inverse Cramer. It's more or less inverse everybody, but poor Jim seems to be getting the brunt of it. So do what you will with that. Anyway, so that's it for the crying segment. Anyway, if you track the Bitcoin Halloween price, which I was looking at earlier, I don't know what I did with it, but I was looking at the correlation between Bitcoin and Halloween. It was pretty cool to see that other than the blip of last year, where the money supply movement caused an extreme price movement, if you actually flatten it out minus last year, it looks like the price of Bitcoin and the date of Halloween correlate with more or less a 50% rise per year. And I was really hoping to have that. I can't, I apologize for that. Anyway, so that's enough of that. And as I said, please click the like and subscribe buttons on YouTube. If you're listening on Apple or Spotify, give us a 5-star rating. As I said earlier, even better, share the video or podcast with your social media feed and share the love. Okay, so one last video. I got to show you this one. So apparently, Zac Efron is a famous actor, is in a new movie, and the movie actually mentions Bitcoin, right? And so let me bring this up. And in the movie, the price of Bitcoin is trading at 1.25 million. So I don't know if this is apocalyptic or, hey, it's a little faint, so you have to listen carefully.
Bitcoin is currently trading at $1.25 million US. Leading charity crypto coin Abra Anything distributed another $1 billion in aid to the Northern Territory fought.
Okay, so the radio announcer said that Bitcoin was currently trading at $1.25 million. Very interesting idea. And we'll see if that becomes a good predictor of the future. All right, so I'm going to do a little bit of a Ask Abra Anything segment here to wrap things up. So I've seen a bunch of questions coming in. Yes, we've started the rollout of Abra Trade, the new version of Abra Trade. Many of you have it already, so you kind of get, I'll bring up my app here while I'm talking just to confirm the message, but if you start Abra and you've upgraded to the newest version, you'll see a message at the top of the screen in Abra Trade. Oh, mine went away. Oh yeah, launching soon, Abra USD and market orders with price safety. Your crypto deposit addresses will change. You will receive a notification when you have been upgraded. Many of you have already been upgraded. I have not, so hopefully I will be upgraded in the next few days. So like I've told you before, I get I'm just like all of you. I get the same features in the same time frame. Obviously, I get to see the pre-release versions as well. But we have started the process of upgrading users. As I said before, the major changes here that you're going to see right away. Abra USD is not a new stablecoin. It simply reflects the balances of all of your USD stablecoins. You can withdraw in any stablecoin you want, and you can deposit in any stablecoin you want that we support. And you'll simply be able to get a one-to-one conversion when you withdraw. And when you convert between dollars and any crypto, we simply give you a great spread by being able to use any of the dollar stable coins in between. And your balance of dollars and USDC or True USD or Binance USD or BUSD, whatever, remains unaffected. Okay. So that is coming. And we've started the rollout now, and it should be done in the next 2 to 3 weeks. All of you should have this new trading app. The price protection feature is super cool. You can click on the Learn More button, and I believe it will give you some insights as to how the price protection will work, and also talk about updates to Abra Boost. Everyone has been migrated now. Abra Boost is fully live. We finished that migration. So those of you were asking, some people asking if they can still do their certification as an accredited investor. Yes, you can do that anytime. If you just click on the support function in the app, if you don't have the email, they'll walk you through the accreditation process there, or send you an email with instructions, whatever you prefer. So let's see, some other questions here. Yeah. Where are we with credit card and NFT? So we are on track for the initial launch of NFT for Art Basel, which is the big art fair at the end of November, early December. And I don't know I think that will be kind of an initial staggered release. So if you're super excited about NFTs, let us know. You can contact us via support, and we can try to get you in the early release group. And we'll have a lot more to say on that. But I'm super, super excited. As I told you in many shows, I'm spending a lot of time in the NFT space right now. I know we're also working super hard on getting some special opportunities for Abra users in the NFT space. I've been talking to several nonprofits who are interested in raising money in the NFT space, and we'll see what we can do there. But yeah, I'm really excited about this new NFT product for Abra. So let's see, other questions. So by the way, we had a price spike during the show. Looks like we may, we're just under the weekly highs on Ethereum now, and Bitcoin also up 2% in the last 24-hour chart here. So looking like good volume this week on Bitcoin and Ethereum. So that's good to see. As I said, you know my logic. These are short-term moves. Always nice to see it go up, but like I said, right now it looks very good. Caesar asked, how can I move ETH2 from Coinbase to Abra? So Caesar, if by ETH2 you mean you're simply holding Ethereum on Coinbase, you simply go to your Coinbase app and you initiate a withdrawal and you generate a deposit address from Abra, and then you copy and paste the deposit address into the withdrawal address on Coinbase. And there's instructions in the FAQs on how to do it. It's very simple. That's probably the biggest source of deposits into Abra is people moving off of exchanges. If, however, you mean that you've staked the Ethereum on Coinbase, it's the ETH is locked up and you can't move it until you can until some unlock is created by the developers of the Ethereum community, and there's no specific time frame for the unlock yet, although I suspect it'll be later next year. So the answer, Caesar, is it depends what you mean by ETH2. So hopefully that answer made sense. If it doesn't, just ask another question and we'll take a look at it, or contact Abra support and they can help you as well. What is the circulating supply of CPRX? Will this information be updated on CoinMarketCap and CoinGecko? Tyler, yes, we will always update the circulating supply. It hasn't changed. It's still the same initial 500 million grant that we got from the Crypto Banking Alliance. To my knowledge, the CBA hasn't made any other grants. They're holding the rest in cold storage. I know that there are discussions going on with other major brands in terms of potential future grants, but I'm not in the middle of those conversations, so I don't have any further updates. Yes, we are going to have Julian on Money Talks, probably closer to the NFT product launch. And somebody said, as a long-term holder of CPERX, how long is this project? Well, my take is CPERX should be around forever, just like Bitcoin and Ethereum, and it should be a reward currency that gets used in lots of projects, not just Abra, over time. And we're fully committed to that. And I have lots of long-term plans for CPERX within Abra, but I think this thing should be around forever, just like Bitcoin, just like Ethereum and other major alternative cryptocurrency projects. USD and FTX seems to work like Abra USD. So Adam, I'm not an expert in how USD works in FTX, so I can't comment. But if it's similar and it's obvious to you, that's great. Let's see what else. Lock and Lock says people who trust in us and invest in CPERX are suffering. So Lock and Lock, I find that hard to believe that people are suffering. There are, some people who did make small investments in CPERX, but we know the average purchase amount for people in CPERX, and the average purchase amount was very, very small. And the price has been very stable over the last 4 months or so. We've been very clear and transparent on our plans for CPERX in terms of being fully committed to this in the long term. And it will be tied eventually to the credit card. It'll be tied to trading. It'll be tied to third-party apps. And we're fully committed to it. It's going to be coming back. And yeah, let's see. So Catherine was asking about LA Blockchain. So Catherine, we're actually not going to be at LA Blockchain this year. Some Abra marketing and sales staff may be there. I am actually unable to go. Originally, I was hoping to be on a panel or a keynote there. I was invited, but unfortunately, I was invited to speak, but unfortunately, I couldn't work it out. But we may have some Abra staff there, or if we do an event, we'll certainly post it on our Twitter feed. But we're super, super busy right now with all of these product launches, bank licenses that we've talked about. And so unfortunately, wasn't able to work it out, at least as of now. May change in the next few days, but I doubt it. As of right now, not planning to be in LA. Let's see. A bunch of other questions. So somebody asks, CPRX has a lot of Korean holders. Did I know that? Yes, I did know that. However, what you may not know is there are hundreds of thousands of people holding CPERCs. Most of that is staked in Abra, and most of those people are not in Korea. And so they're all over the world. And we love all of our Abra users in every country equally. And as I said, happy to continue to answer these questions, but we are, completely committed to CPERCs for the long term. And as I said, we're planning to turn on trading at some point after anyway, I'm going to stop there. And I'm done with CPERCs for today. And I'll take a couple of other questions. I should dress up as Jerome Powell. Hey, dude, I don't look old enough to dress up as Jerome Powell. And that's my story, and I'm going to stick with it. But thanks for the costume advice. Keep it coming. That's probably the nicest thing that anybody has recommended in terms of costume. If you could integrate paying with PayPal in countries like Guatemala, you would be opening a big door for us. Do you ever plan on that? We've looked at PayPal integration, but to be honest, the problem is PayPal, their ability and willingness to support crypto companies. Honestly, I like Dan. I've known Dan Schulman, the CEO, for a long time, since before he joined PayPal. But it's not a good look for PayPal right now, the way that they're basically making these ridiculous policies that don't seem to be coming from regulators and that seem to be hurting their users. And I'm not a big fan of PayPal right now. And so my interest in integrating was much stronger a few years ago. And now my interest is in working with them is waning, because I neither like nor trust them right now. And maybe that'll change in the future, but right now that's how I feel about it. Dave Barnes asks, is the Abra store going to come back? That's a great question. I will find out what the status is of the Abra store and come back to you next week with a good answer, because I have no idea, and I should know that. And by the way, shout out to my friends from FaZe Clan down in LA. I got to meet them a few weeks ago. Big fan of what they're doing, and I think we're going to see a lot more announcements. You can see the shirt. There's the FaZe logo. I know we have a bunch of gamers here. I know some of you are playing Axie. My kids love FaZe. And so got to visit their office. Super cool studio a couple of weeks ago. Can't say more about it right now, but really bullish on their plans for Web3 and NFTs and other stuff. Okay, so let's see, a couple more questions, then we'll call it a day. What is the name of the back-end platform you all are using to integrate multiple exchanges for new trading functionality? Paul, the name of the platform is Abra. So that's it. Let's see. And let's see, more comments on PayPal. Yeah, I get it. Look, if there was an easy way for us to get money out of PayPal into Abra, we would probably do it. But PayPal basically blocks companies trying to do it. And Robert asked, I saw this just come in, will there be HBAR staking on Abra in the future? And I wouldn't be surprised, Robert. Right now, no specific plans. I would love to add staking for all the top cryptos. With the new trading system, it will be much easier for us to add staking of other assets. Won't get into the technical reasons as to why that is, but it will be. And so wouldn't be surprised if you see that in the future. Catherine, great idea on giving away merchandise on the show. Let me bring that up with the team. And I would love that. We actually have some new hats and whatnot that we've designed as well. So maybe we'll do that in the next few weeks. Okay. All right. So let me see here. Okay, so I'm going to stop there. But we're all going on an hour. Great questions this week. Yes, we will continue to look at staking, and we will continue to look at adding new tokens. All of this will get easier with the new trading system. And so stay tuned for all of that. In the meantime, thank you for watching. Remember to click that like button, click the subscribe button, share the Apple and Spotify podcasts with your friends, get the word out. We want to get the viewership way up this winter with all the great stuff coming out on Abra. And keep the comments coming. We love to see them. If you have kids, hope you enjoy your Halloween with them. And we will see you next week on Money Talks. Take care, everyone.